Welcome to The Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. I'm Mark Elliot, and of course, Doug and Luke and the team, they have decades of experience under one roof helping folks just like you with their retirement plans here in the Independence, Cleveland, and Northeast Ohio area. I'm Mark Elliot. We talk about a lot of different things, all pertaining to retirement. Could be the markets, could be taxes and the like. Here's a stat for you to start the day, and I'll see where you want to go with this. You may not want to go anywhere, but that's how we roll right here on The Retirement Guys. Zoom had 10 million participants in December. In April, Zoom had 300 million participants. So we know the airline's issues with the travel and all of that because of all that's going on. Zoom's value is up to $48 billion. That is more than the top 7 airlines.
No, I mean,
did you foresee that, Doug?
Of course. I mean,
Of course.
I have the magic 8 ball. That's why I do this show, folks. Here's the secret: the cat's out of the bag. I've got the magic 8 ball, and it tells me what's going to happen in the future. It's pretty amazing.
Can I have it, please?
No.
You can get your own at Amazon Prime.
That's true.
The only thing with the magic 8 ball, it does not tell you how to listen to your wife any better. So that selective hearing thing,
I'm still learning that.
Yeah, it just says, yeah, it's okay. You didn't hear what she just said.
Right. No, I feel that. No,
Okay.
but Zoom, I mean, here's the thing. I mean, it's a lot of growth priced in right now. I mean, it's trading probably at a couple hundred times earnings at this point. So Zoom, the thing is with Zoom and any kind of these stocks that's benefiting from the current scenario of
I would
working
say
from home.
I would say it's a one-time.
One time what?
Well, so think about it. I mean, it's unlikely for all the people that logged in when this happened, right? And there's the basic membership would cost you nothing. And then there's a segment of society who said, well, I don't want a basic membership. I want to be able to do this amongst more of my employees. And they pay a one-time thing.
Right.
I would say that, I mean, if I'm just looking at a company that these are one-time revenue pops.
Yeah.
Right? I know some of the people are going to retain it, or they might go to a different platform that, maybe it's cheaper. I don't know. I really haven't, dove into the space yet. But again, think about it. If 100% of the society went, hey, we're going to Zoom, right? Because we have no other option. We don't know what to go to. We've only heard of Zoom, and then they're going to get those one-time revenues. You get that Premier, whatever it is.
Yep.
And then next year, maybe you see a fall off on that, so the revenues won't be the same.
Right. The question is it here to stay? And I think.
Oh yeah.
I mean that's really what you're hinting at, and yeah, I think it's going to get some benefit down the road, coming out of this. Like it's going to be better than if this didn't happen, but. A lot of people, working from home, that might be here to stay a little bit. Mm-hmm. Traveling to conferences might not happen as much because they're expensive, right? So, businesses, if you have their employees in-house, that's a lot of real estate you have to buy, right? So that's something down the road that's a lot of business owners are going to be hit with is, can my employees work from home, or do I have to have all the space in my office?
Oh, no. Again, I'm just saying it was an abnormal event to cause an abnormal amount of people to utilize a product. Right. So let's say a lot of those retail people just clicked on it anyways, the smaller companies that are going to go back. So that's what I'm saying. At the end of the day, I don't know how you could justify saying, hey, we're going to go from 10 million to 300 million people.
Right.
And it's not like it's going to go to 1 billion people. I mean, it could.
Right.
You know what I mean?
And the thing is, you hit on the free subscription compared to the paid subscription, right? Mm-hmm. So a lot of people are just using the free version, which, they're not making any money off of. They're actually probably losing money because they had to build the infrastructure to support all those people. So, a lot of people probably aren't going to pay for that down the road. So that's something that they're going to have to face. But really what we're hinting at is, what's going to happen down the road? How can we prepare for the future? And that's our job here, to make sure that we do kind of prepare for the future and take all the variables into account to make sure that our clients are in the best position possible.
Did you write that down? Did you practice that?
I did not.
I think this kid practiced it.
It's
Mark, he's got notes here. We're going to send
I'm sure. I mean, Luke's sharp. I get it. Luke's got to be ready. He doesn't know where you're going, so he's got to be ready.
Yeah, so for anyone listening out there, I literally don't know where I'm going most weeks. We sit down, and every week Mark asks us, what are we going to talk about? And I typically say, I don't know. That's a great question. Like last night, for example, I was just telling Luke when I got into the studio, I don't know if you heard it, Mark, but it was one of those nights where you go to bed, you're like, I'm going to bed early. It's going to get a good night's sleep, and then 3 hours into it, all of a sudden you're wide awake. You're wide awake at like 1:45 to 5, right? And then you got
one of those nights.
Yeah. And it'd be cool if it was something like, you know how people take naps during the day? But
I do not.
But let's imagine we create a thing where people do night naps, right? You take a 3-hour night nap, you get up, you do something productive, which I did. I started cleaning up because I have some carpet installers coming by to fix something, and then you go back to sleep for a few hours, and you get up and have a full work day.
You don't get the REM sleep, though.
Oh, REM sleep's for the birds, man. I hear everything anyways.
Right.
I don't know, Mark, I don't know how you sleep, man, but you could walk in front of my house and sneeze, and my driveway is about 100 feet long, and I'm sitting up. So I'm the kind of guy that, for as much as I like wildlife, birds in the morning are not my friend.
So I do think it's interesting because you think of Zoom, and there, you go back to the dot-com bubble bursting. Certainly that was an incredible run, and then you go, oh, wait, that's way overvalued. So it crashed. Zoom could be in that area, but Zoom certainly is going to be more of a factor going forward than they were, say, 5 years ago, just because more and more people will be using it probably. And as Luke said, maybe they're not going to be sending their people to conferences. We'll just do it virtual Zoom meetings and the like. So that brings up another thing, because Luke also said, you see, Doug, how Luke is really on top of his game today because he slept well last night.
I had a nice cigar last night.
He said,
I'm in a good mood.
Yes. So you think about it, because what if, there's over, 100,000 small businesses. I think they're saying 1 in 5, 1 in 4 restaurants will never come back. It's the small restaurants, which is really sad. But you think about the real estate side of things. Whether you're an owner, right? You're leasing an apartment or a house to somebody, they're paying rent. Oh, wait, that got waived for 3 months. Now I've got issues because I got to pay those bills still. And then the commercial real estate, that people are going, well, I don't even think I need to rent that building anymore. I can just do a Zoom meeting. How do you feel this is all going to impact real estate?
I don't know, but I'm still on the sleep thing. You know what? I think he didn't answer me because he probably sleeps like a baby. Do you sleep like a baby, Mark?
I used to. I would say now I'm a much lighter sleeper.
This guy probably sits down. He's one of those guys that can sit down after drinking a pot of coffee and he falls asleep 37 seconds later.
Yeah.
Yeah, I hate that. That's not fair.
I'm one of those guys.
I lay there and think, yeah, that's why I barely like you. So, yeah, I was so focused on the sleep thing that I think he asked us how it's going to impact real estate, which we talk about every week. So we won't beat that dead horse too much, but yeah, no, I think the biggest thing when we look at the overall economic impact of what's happening, the one thing and the concern that I see is in, about 8 weeks when PUA runs out, right? And when PUA runs out and there's a drop of cash flow, right? And there's a drop of cash flow, people aren't going to pay their bills on the 1st of August, right? Hopefully people are being responsible. Some of the people I've talked to that are getting the PUA plus the unemployment are actually making smart decisions. They're being more frugal. They're paying their bills in advance. One of the girls in our building told me she paid a couple months of her rent in advance. Mm-hmm. So already expecting the money. So you would hope that a lot of people, do that. But, for maybe some of these small businesses or just people in general, like if there is a 50% reduction in your money overnight, I would say that it could shake up the markets a little bit.
Let me put it this way. I went out to a couple bars this past weekend.
You went out?
I went out.
Why are you sitting near me? You went to a bar?
I'm 6 feet away. But I went out to a couple bars this past week, and I actually talked to a bartender at one of those places. And I just asked him about how that was affecting their bar, how it was affecting them. And he actually gave me a really good point, and it made me start thinking. So the way he put it was, these past couple months, especially here in Cleveland with the Indians, these have been probably the best, 2 months of revenue that they typically have. March, April, May. These are the best months because it's baseball season, right? Everyone loves baseball, right, Mark?
You mean they're normally?
Absolutely, yeah.
Yeah, they're normally packed, and they normally have the highest revenue out of the year during this time. So they missed out on this lost revenue, right? So throughout time, they're not really feeling the impact right now as much as they will over the next 6-7 months, because if you amortize that revenue over the next 6-7 months, they're really going to start hurting probably coming next year when they can't make up for any of that lost revenue, right? So it's kind of a lagging effect. It's going to be 6-7 months down the road that they're going to realize, wow, our cash flows are hurting. We don't have the amount of revenue we had, the past year. Yes, we're probably going to make that back in, over the next couple years. But since we missed out on these, just 3 months of the highest revenue that they have throughout the year, they're going to really feel the pain next year.
Yeah, I was listening to the sports talk. I got a brain cramp. I was listening to 92.3, listening to Dustin Fox, and I guess they did a quick poll on, there's like 3 options. If the Browns were playing the Steelers tomorrow, would you go to the game? And option 1 is, would you just go to the game? Option 2 is like, would you go if people are wearing a mask? But like 50% of the respondents are like, yeah, I'd go, and then half were like, no.
Yeah.
You know what I mean? So it's ultimately, I think that you might have even lower ticket sales for certain events that will create a bigger lag on the industry in general, because you're not going to get the same foot traffic to go to a Cavs game, Browns games, we'll see what happens this fall.
Well, you're also faced with the younger crowds are kind of going out more than the older crowds, right? So
good. It doesn't mean that the younger crowd can afford.
And that's what I was about to say.
The lower level Browns stadium.
And that's what I was about to say was these lower level tickets or these higher tickets, these higher price tickets. Most people can't afford that. At the
the draft room. Look, the Browns put together something really nice. They have this draft room, and I went there the other year. We had some lower level tickets, and I looked at the ticket price, and it was like $300 some per seat for lower corner of the stadium. And I went, what does this get me? And you get to go to a private bar area, and I'm like, well, geez, I could have just sat 50 yards to the left for $100, right? So I don't see them being able to even comfortably, if it's younger generation going out, what are the NFL teams going to reduce their prices?
They might
on
have
tickets?
to. They might have to, and so they're obviously not generating as much revenue, which is an issue.
Right. There's all kinds of issues. Like I said, there's normally going to be foot traffic, and again, you got to think about, we're a big tailgating town.
Yeah.
Right.
I'm closer to Pittsburgh. We are too.
No, I've gone to your tailgates. They're terrible.
Oh, come on.
No, they are. Look, Pittsburgh people are super nice for the most part. The last time I went to a Browns-Steelers game, I was actually treated fairly well. I've been treated worse by Browns fans, and I'm a Browns fan. But no, it's I don't know how I think you guys are big tailgaters down in Kansas. I could be wrong. What's going on in Kansas for tailgating, Mark?
Oh, yeah, absolutely. The Super Bowl champion Chiefs, is that who you're talking about at Arrowhead Stadium?
Yes.
The
Chiefs,
there's a lot of barbecuing going on.
Who are the Chiefs? I've never heard of them.
Yeah, they're decent.
Yeah, pretty average. Their offense doesn't score too many points. But at any rate, like I've gone to different tailgate areas, right? And I've been to Pittsburgh's tailgate, and it's not like the Browns.
Right.
It's not at all. You know what I mean? I walked around with my cousins, and I was kind of like, so where's like the big tailgate area? And they're like, oh, right here.
It's everywhere.
Yeah, they're just like kind of like there's like one bar,
right?
Where like the entirety of downtown Cleveland is like partying.
Yeah.
So I just wonder if there's going to be less foot traffic, or if you're going to have less people going into the games, and you're going to have more people. So it could go both ways. But at any rate, you're going to see revenue changes. We've got the major league is asking like people like Mike Trout or Garrett Cole. Someone told me Garrett Cole is supposed to make $36 million this year, which first of all is ridiculous. Good for him.
He's a good pitcher.
He's a great pitcher. But then they're saying, we want to pay you $9 million for half a season.
Yeah.
How do you go from 36 to 9?
Yeah.
So again, there's going to be foot traffic affected for businesses in all these towns. It's going to be quite interesting to see how this all shakes out, because none of us know what's going to happen when it comes to the overall economy. And if the government split, they basically said they're not going to let any more of the stimulus happen. I'm pretty sure he said over my dead body.
Right.
Right. So
I mean, and outside of that too, we haven't even hit on, the businesses and their vision of the future, right? All these business owners don't have a clear vision of what's going to happen over the next year. So I know we hit on that in the past, so I'm not going to, like you said, beat a dead horse. But without that vision, they're not investing in research, development, growth areas, and that's going to hurt the economy over time. I mean, we probably hurt the economy for the next 5 to 10 years.
Yeah, and look, the point we get at every week, and for the people that I've spoken to who've called the show at 216-800-9890, they said one of the things that stands out to them is this is not a time to be set it and forget it. This is not a time to kind of hang out and wait for, basically nothing to happen with your portfolios, right? I've heard from a lot of people that they basically said, my guy didn't do anything. My portfolio went down as much as the market, so it tracked the market, but it wasn't even entirely invested directly in the market, which I found fascinating.
Right.
And the guy's response was, yeah, maybe you should do this or do that now, which tells me that there's a disconnect between some of these set it and forget it advisors because they're used to collecting their commission check or whatever it is, and then, they're golfing most of the time.
Right.
So I found it interesting that it's a common theme that, oh, yeah, your mutual fund may or may not come. Yeah, maybe we'll shift now. What do you mean maybe you're making changes now
to
the
too
portfolio?
Late.
It's too late, for sure. And that's the difference between being proactive versus being reactive. Right? And reactive usually doesn't bode well.
It never does.
No.
And of course, as Doug said, that number, if you have questions about where you are on your road to retirement, should you be doing something now? I think, as Doug said, you should be proactive rather than say, you know what, guys, I'll come see you in November when we've got a little bit better feel. You could be missing some opportunities, some chances to put yourself in a better position going forward. That number, 216-800-9890. There's no cost, 216-800-9890. And, of course, you can always go to Doug's website, trg.swpconnect.com to find out more, trg.swpconnect.com. Glad you're with us today for the Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. We're back with more right after this. Glad you're with us today for the Retirement Guys. I'm Mark Elliot alongside Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. They have decades of experience trying to help you come up with that plan and strategy for your retirement. Here's the deal. What you don't know, you don't know. If you've never retired before, why not talk to people that can help you in that world? That is Doug and Luke and the team of Strategic Wealth Partners. We're talking about a lot of different things as we always do every week on the program. And, we've talked about the markets. Last week we spent a lot of time on the markets. Well, now the markets are rolling along again, so everything's perfect, yes?
Yeah, well, I wouldn't say everything's perfect. Again, every week we talk about the disconnect between what's actually happening with the market and what's actually happening economically. And every week we talk about, gosh, there can be this cliff. I mean, last week we talked about the technicals, which our last resistance was 29.90, and we've busted through that.
We did. We didn't close above it though, which was something very interesting midweek.
Right. No, I mean, it's at 3,014 right now.
Right.
You know what I mean? So, according to the technicals, I mean, pretty soon, I guess the market's going to go straight through the roof, and everyone's going to be super rich because they're getting free money from the government, and they're all going to hang out at home. And
well, real quick, from a technical standpoint, there's a lot of overhead resistance though, because there's a lot of buying above the 3,000, all the way from 3,000 to 3,400, where we made the top.
Slow down. The first word you said that there's a lot of resistance overhead. Yeah, but you said some other word I couldn't understand. You
I mumbled a little bit.
Yeah, you mumbled a lot of it. But then again, I listen to a lot of shows that I do, and when I think I'm speaking eloquently and I'm speaking clearly, I'm like, I just mushed about 4 words together.
Well, right when you said technicals, I got passionate, so I wanted to just talk very fast.
Well, we were talking about technicals, talking about fundamentals. I think, it's really hard to explain. Again, fundamentally, nothing makes sense. Technically, again, being above that level, a lot of those people would be bullish at the moment, especially technical traders. Again, it still doesn't make sense to me. I mean, could we reasonably say the market's going to run for a little bit because we've got retail investors jumping in, and we've got some other large advisory firms buying in because their clients are calling them with FOMO. And then ultimately, things reverse course when the PUA money stops. But that's where I was listening to another show, and one of the phone calls into the show was, can I buy a stock that doesn't track the market, right? And I think the guy's response was, here's the definition of beta, right? So if you are a beta of 1, that means you move as the market. If you're a beta of 1.5, it's like you're 50% more volatile than the market.
Right.
If you're less than 1, you're less volatile than the market. And I think he was missing what the guy was asking, or missed the opportunity to talk in general about, being in the market, right? And that's where we talk about every week, that when you hold the best in breed stocks, it's okay to be in those stocks, right? For the long run, you have to identify companies that do a certain thing, have a certain product, have a certain cash flow, and you can predict the value of that stock. Where I think a lot of the general public thinks they don't belong in stocks is because they think that they're 60 years old and they're supposed to buy bonds,
Right.
or they're supposed to buy target date retirement funds. And I'm telling you that that's just not what you should be doing. Now, again, you need a certain amount of assets to be in a diverse stock portfolio, okay? And let's say your baseline just for your stock positions should be 250 to 300,000. So
Right.
just for your individualized positions, and then on top of that, for your fixed assets, let's say you need another $200,000 to do it really exactly, right? And when this gentleman had asked, can I buy stocks that don't do what the market does? He went into a definition of beta, and then talked about maybe how utilities don't move a certain way when the market's down because it's defensive. Yeah. But I think the real response is if you identify through appropriate cash flow retirement planning when you need certain buckets of money, okay? This is going to make Mark happy because I think 6 or 7 weeks ago we started talking about buckets. A lot of firms talk about 3 buckets. They talk about short-term, mid-term, and long-term money, and you divide your investments amongst those differently. So your short-term money, short-term treasuries, cash.
Right.
Midterm, so that's 5 to 10 years. You might be in some bonds and some equities, and then your long-term bucket is 100% equities.
Right.
I think the real answer for people is you should have a 4th bucket, and it's a large emergency reserve. And some people go, well, I don't know how to do that. I've only got 1 IRA, Doug. That's fine. Maybe we just keep more cash in that bucket if we know there's short-term needs happening. That way, if you are in stocks and you are in a proactively traded account, you don't have to worry about the fact that the market went down.
Right.
Because we've carved out a bucket of cash to sustain you through a bear market. Because then we also have to take into account your Social Security, your pensions, your other IRA withdrawals. And once you've created a structured withdrawal strategy between Social Security, your IRAs, and your pensions, and you've identified the amount of cash to cover any kind of miscellaneous needs, right? It doesn't matter if the market has gone down 20% in your long bucket,
Right.
because you have enough cash to carry you through something that we've calculated, right? So let's say a real bear market's 3 years. We'll figure out that if your Social Security, your pension, and your IRA withdrawals only cover 80% of your money, that's cool. Well, we need to make up that other $1,000 a month or whatever it is over the course of 3 years. So our emergency bucket's $36,000. Right? If we have that $36,000 in our 4th bucket, it doesn't matter what happens in the world economy if you're holding companies that have strong balance sheets, that have predictable revenues, and they're industry leaders.
Well, you're talking about diversification as well. And when we talk about diversification, typically we mean different asset classes. But what you're referring to is diversification within a stock portfolio itself. So different stocks and diversifying that kind of that bucket of your portfolio. And one way you can do that, think of it this way, right, if you own a stock like a big tech stock like Zoom, what we talked about earlier, compared to maybe a stock like Procter and Gamble, Zoom, since it's valued so high, it's priced in all this growth, it's going to react very aggressively with the market. But a stock like Procter and Gamble might not, because it's more defensive. People are still going to be buying all the different goods that Procter and Gamble gives. So that's how, kind of, if you think about it, if you kind of have this diversification within your stock portfolio and own these different stocks that all perform a little differently, then you can have diversification within diversification.
Well, that's modern portfolio theory.
Right. The efficient frontier and everything like that.
Right. But now it's, again, modern portfolio theory doesn't even fully apply, because you can't just sit on and say, well, we're going to have utilities for our defensive placement. We're going to have short-term treasuries with this sort of duration. You still need to have movement within your portfolio in order to have the right offset mix, right? And I'm telling you right now, and it drives me nuts, again, because it's been ingrained in your mind that you should just be buying a bond or buying some annuity because you're 60 years old. It's nuts. There's nothing wrong with annuities. There's nothing wrong with bonds, but you should not be going through life with the thought process of, well, I'm retiring. I only have one option. That is so wrong.
Yep.
It's completely wrong. You miss upside, and you also miss the ability to guarantee that you never run out of money.
Right.
Because eventually those fixed income assets are not going to grow or keep up with inflation, and you're going to run out of money in your late 70s or early 80s.
And your situation is going to be different than my situation, right? So you have to take into account all the different variables. And if you just miss a couple of those, it can really affect your situation. So if the guy next to you is going all stocks and you're going all stocks with him, but maybe your situation does not fit an all stock strategy, right? So you have to make sure that you take a look at your situation personally, because you are going to be different than the person next to you.
Yeah, and speaking of stocks, we've talked about it before. If you go to trg.swpconnect.com, there's a little tool there we call Portfolio X-Ray. And this is what you can utilize to get a customizable report sent to you, letting you know where you actually stand fundamentally with your investments. My team will put together a customized report that says, here's what's good, here's what's bad, and here's what's really ugly. And you'll be able to decide on your own if you need to make changes in your life. So what you do is you go to trg.swpconnect.com. You scroll down the page, go to Portfolio X-Ray, put in your top 10 holdings, and someone from my team will contact you, or maybe I'll contact you, and we'll go over what we found. Again, trg.swpconnect.com, and always, if you want to give me a call, 216-800-9890 to schedule an appointment. That sounds good to me, but you got to remember, this is a recording, so I'm going to have to call you 2 days later. Talk to you soon. 216-800-9890.
Glad you're with us today for the Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. I'm Mark Elliot. You know, you're mentioning that cash stash, if you will, to offset that if the markets are going the wrong way, so you're not having to pull money out of the markets, because then you're kind of losing money twice that way, I guess.
Right.
Do you think this whole scenario, though, because people have been talking about, hey, you need to have some money put away. Maybe it's 3 to 6 months, kind of money set aside. Do you think people are realizing after something like this happening, the layoffs and all of that, that they're like, ooh, I guess Doug and Luke were right. I should be putting some money on the side just in case. Do you feel like people are realizing that now? Maybe more so than they were maybe 6 months ago?
I think you have two sides. You have the people that are realizing that, and then you have the people saying, okay, well, the government's kind of just going to bail me out a little bit. They're going to give me that check. They might have the PPP program. If bad things happen like this in the future, that's what they're going to do. So I think you have both sides, and I do think the majority of people are going to come out of this and say, okay, maybe I do need, like you said, 3 to 6 months. I would say 6 to 12 months of emergency reserves, because, I mean, why not be more protected, right? But it is going to be interesting to observe the kind of behavioral finance that's going to come out of this. But I do think most people are going to take that precaution.
You would hope. Again, the PUA program largely is helping a lot of people.
Right.
There's a lot of people that are really, it's helping them long term if they make smart decisions. Again, you hate to say, well, they're just going to cut it off, in July. Which is very possible. I would hope that the government in general could come to some sort of mutual agreement that everything doesn't have to be a home run. And that's what's always frustrated me with politics. In general, it's like there is such a divide amongst sides. And that's where, like, when I was listening to Mark's podcast, president of our firm, he was talking about, you can fiscally be a Republican and you can be a liberal on other ideas. It doesn't have to be one side or the other.
It's like a libertarian.
Yeah, it's crazy how there's such a huge divide. It's not even close, right? Where they're like, well, we're going to pass $3 trillion. And then the other side goes, nope, we're going to do none of that. And then we're going to bicker for a while. And then in the 24th hour, they're going to go, okay, we'll do something in here.
Well, then you have both sides kind of competing for small amounts of money that might be allocated towards different things. So really, what's supposed to help the American public also can't even really do that.
It's crazy to me. It's like they're creating money, they're giving it away. Where it's like if you just met in the middle somewhere,
right,
and said, hey, you know what, it isn't realistic to cut these people off in July, but maybe we do some sort of a cliff reduction where it's in August now it's going to be 75% and then 50% PUA, and then by the end of the year it goes to nothing.
Right.
Rather than just something's going to happen, and you would hope that they would be reasonable enough to man, it's kind of like yanking the power cord out, right? Your TV is going to shut off, right? If you yank 50% of people's money right off the top, it's going to create an issue, and that's why again when we talk on this show that you should not be waiting for this to shake out. Especially with your 401ks that you've worked 20, 30, 40 years for, your brokerage accounts, you can't just set it and say, well, my guy said, well, maybe this or maybe that's going to happen. No, you need to have like an exact idea of what you should be doing to make sure that you have your 4 buckets, you have your emergency reserve, you have your short-term, midterm, and long-term money already identifiable, understanding what that money is going to do for you, because with this kind of government structure that we have, we don't know what the heck they're going to do.
Right.
And right now, the only reason the market's doing what it's doing largely is because they're just printing money. And then, of course, they're saying, well, we might have a vaccine. Well, that's nice. It still doesn't explain what's going to happen economically in the long term.
Right.
Warren will show up and say, oh, I've seen this, I've seen that, in his 89 years of life, and every time it comes back.
Right.
It's true. It is so true. But if you're one of those people that is being retired out right now and you need to understand how you should be invested, you can't be sitting on your hands anymore and waiting for your advisor to come up with some kind of novel idea. Oh, don't worry, just go into bonds. Really? Just go into bonds? What happens if the government says we're not going to buy these bonds anymore?
Right.
Right?
And what kind of bonds too? I mean, that's the question itself.
I don't know. It's all nuts. But thanks for listening to the nuts. I appreciate it. Every week that people tune in to hear us talk about how nuts the world is right now.
It's a lot of fun, though.
Yeah, I think everyone really just tunes in to hear Mark's lovely voice over there in Topeka.
Absolutely. And if you would like to chat with the team at Strategic Wealth Partners about your specific situation, it's 216-800-9890, 216-800-9890. You can always go to the website and do what Doug said. There's a couple different things you can do on the website. Go check it out, trg.swpconnect.com, trg.swpconnect.com. So here's the real question. What happens when you call that number? I don't know. We're going to find out right after this. Stay with us. This is the Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. We're going to find out what happens when you call the team. Stay tuned. Glad you're with us today for the Retirement Guys with Doug Harbaugh and Luke Lloyd. Doug, of course, an advisor with Strategic Wealth Partners. Luke is an investment strategist. I'm Mark Elliot. And, every week on this program, we get to hear the inside of Doug and Luke. And wherever they go, they go. We don't really have a lot of control over them, so they go wherever they want to go. But you can always call. We always say if you have questions about your specific situation, then it's time to be proactive. Quit kind of procrastinating and being reactive. Something happens. Ooh, I better do something. No, let's get ahead of that. And so call the team, 216-800-9890. Now, Doug, I know this all starts with a discovery meeting. And when I call you, you're not going to try to sell me something, I would imagine, because you don't know anything about me. How does that work when somebody does give you a call?
Well, typically the first phone call is more of a basic exploratory phone call. You may have some questions for me, and I'd be happy to answer them when you call. But the first phone call is to kind of get an idea of what's going on. Typically from there, people that want a detailed analysis, which is most people that call, I have them send me a PDF of their overall investments, like a statement that shows me their holdings, because if I have all the holdings, then I can put together an analysis. From there, at some point, we would have a longer phone call. And again, it's kind of unique because of the world. So normally people would call me and they would come in for something called a discovery meeting. And during the discovery meeting, we would get to understand the people, who they are, where they're going. And then we would invite them back to go over our findings, to let them know where they stand financially. So it's a little bit different now. It's sometimes we can, on that first phone call, we just dive right into a longer discovery. Sometimes, that 15-minute phone call, we reschedule something a little longer. But the goal of it is to understand the people behind the numbers, to understand what their needs are. And what I mean by their needs is, what do you need emotionally, right? What do you need to create a trusted relationship? What do you need to feel comfortable with, the overall circumstances that we're presenting to you, saying, hey, here's where you've been, here's where you could be going, and here's how you get there, right? But everyone needs a message delivered a little bit differently, right? So I always say some people are really granular, right? So I have a lot of engineers who love talking into the finite detail, and then I have some people that, basically want you to be a spaceship just looking down at the map and just going, okay, that's that state, cool, just give me the summary. Right. You know what I mean? So everyone's a little bit different. But yeah, when you call, it's at the end of the day, I just need information. If you give me information, I can give you information, right? So the more you tell me about who you are and where you've been and where you want to be, the easier it is for me to give you an answer.
Right. And one thing you hit on was making sure that you feel comfortable. And that's a big part of our job that a lot of people don't realize. A lot of people think it is just our job just to tell you the numbers, just to tell you how it is. And that, don't get me wrong, that is a part of our job, but you have to feel comfortable. And that's coming back to risk tolerance as well. We always make sure that our clients do have a good idea about their risk tolerance and if they are able to sleep at night, because that's important.
Yeah, as I said, a lot of people have there's major misconceptions as to what investing really is, right, what the markets really are, and it makes it tough for when we do something a little more sophisticated compared to that mutual fund portfolio, right? So people go, this is better, but man, it's kind of intimidating. So it takes time, to kind of build that relationship and understanding, because again, people, I guess, innately fear change.
Right.
Right.
Just human nature.
Right. They're just like, man, I've just been holding these 4 mutual funds for the last 200 years. Why would I do something different?
And it's like the past 10 years have been so well, too. So a lot of people say, well, I've held these mutual funds, and they've done well because it's passive investing. And we always hit on this every radio show as well. Yeah. So I'm not going to, again, beat it at that horse. But the past 10 years have been phenomenal. So these next 10 years are not going to be the same.
No, and again, getting people, I guess, just to understand that there's a better way to do it. And that's why I always say you deserve sophisticated, you deserve dynamic, you deserve strategic when it comes to your investing. You deserve better. And that's why I always implore people to give me a call at 216-800-9890 to, at minimum, figure out, could you be doing something better? There's going to be some cases when people call me and I go, hey, you're good. But isn't it good to know that you're good?
Right.
Right.
I mean, we also talk about the power of compounding too, right? So if you do have that sophistication, that more intensive strategy, it might get you 1 or 2% more in your portfolio every year. I mean, just that 1 or 2% can really affect your ending balance in retirement. Because let's say you get 8% return, the rule of 72, it's going to double in 9 years. At 9%, it's going to double in 8 years. It gives you 1 year of compound growth, and that's really going to be important.
So let's clarify what Luke is saying here. We are not promising you a better rate of return. You can't do that, but it is founded statistically by making strategic moves within your portfolios. Number one being a withdrawal strategy. So creating the right order of operations when it comes to withdrawing from your brokerage accounts, withdrawing from your Roths, withdrawing from your IRAs. There is a strategy that is proven through the CFA Institute. Excuse me as my voice cracks. Like what's the one, Brady, whose voice in the Brady Bunch?
I don't know.
Oh,
I've never seen
You're 12 years old. Anyways, my voice was cracked. But there's a study through the CFA Institute that proves that you can extend the life of your cash flows by withdrawing from the right account in the right order.
Right.
Then there's things like rebalancing.
Yeah, 25 bips. That's what it says.
Okay, so people don't know what 25 bips is. Basis points. 25 is a quarter of 1%. By doing that, puts you in a better predicament. By having an advisor that helps coach you emotionally adds a percent. At the end of the day, if you have a better risk-adjusted rate of return, if you have a withdrawal strategy, you have an advisor that rebalances, and you have an advisor that kind of like tempers the chaos in your world, it can add those 2 to 3% of return. Not to mention tax planning.
Yeah.
So then you add in tax planning. This is where we talk about the exponential growth of portfolios. It's not necessarily about picking the best of the best stocks, which we do, but it's also about creating a structured retirement plan that shows you here's exactly what you're going to do with your pension, your Social Security, withdrawal strategies from your stock portfolios, your IRAs, your Roths. Here's how we get to where we're going, and this is how it grows your account.
Right.
We're not out there swinging for the fences.
And not only can it increase the value added, but also may reduce the standard deviation as well, which is the volatility. And that makes you sleep better at night. That's what we just hinted at.
So again, you said, a second ago you said basis points, and then now you said standard deviation.
Yeah, I'm throwing out all these crazy math
standard
terms.
deviation is a statistical term which measures
volatility.
There you go. And most of the market hangs out, 2/3 of market returns hang out in the first standard deviation, right?
Right.
And then you're in your second standard deviation.
Which is 95%.
And then your third standard deviation, which is what we basically were in, right? Which is what's the number?
What's that? 3 standard deviations?
Yeah. Only happens, what's the number?
Oh, I mean, it's a crazy astronomical number, like 1 out of however many times. I mean, you got to think 2 standard deviations is 95%, so 3 would be within 99% of market returns or within 3 standard deviations.
Right.
So it happens once maybe every century.
For these black swan events.
Swans. And we've had 2 in like 3 now, probably in the past like 20 years.
Right. So you have 3 black swan events, which are super rare, but they're not so rare in the last 20 years because the world's changing. But that's why, again, identifying what you need in life financially then allows for you to build a structured portfolio with the right mix of assets. And I'm telling you right now, that mix of assets does not include you buying 100% of your money into an annuity. I'm going to say that again. Stop listening to these people that get on the radio or they run these commercials saying that the stock market's the casino. That's insane.
Yeah.
That is completely insane. And it should be illegal to even say that because it's preying on people's fears that they've worked all these years to save money, and now someone's telling them, oh, the stock market's a casino.
Well, I don't think
Get
a
out of
casino
here.
gives you, averages 6% a year over the past, century, whatever the number is. I don't think any casino can do that. Most, the odds are against you in a casino, really in the market. If you're long, I mean, the odds should be with you.
Again, when you identify your buckets of money, it is okay to have money in the market, right? Most people that come in, when we run a cash flow retirement plan, the rate of return necessary for them to never run out of money, well, you can't get that in bonds or in savings accounts. And I get that people are fearful of losing what they worked for.
Yeah,
but that's because someone has never given them the appropriate information on how to be better.
But you're going to lose money if you aren't invested because of inflation.
Right.
So, I mean, the thing is, by not being invested into an inflation hedge, whether that be stocks, bonds, a strategically balanced portfolio, you're actually making yourself worse off.
Right. Look, and again, I've said it before, there's nothing wrong with annuities. They're really usable, right? You can use an annuity as so here's an interesting thing that you can use an indexed annuity for, okay? The interesting thing about indexed annuities is you can participate in the upside of the market and never lose your money. That's terrific. The problem with index annuities is not all index annuities are equal because they all have different participation rates. So what happens with an annuity, an index annuity, is let's say you put in $100,000 of your money and you say, well, I'm going to put that $100,000 in something called an S&P 500 annual point-to-point, meaning that from the date that this contract starts to the next year, it's going to give me a rate of return based on a participation rate. So if over that year the market goes up 20% and my index annuity has a 10% 10% cap, meaning that I can only get 10% of that. And then of that 10%, they're giving me a 40% participation rate. I know I'm losing everyone here. So imagine this. The market goes up 20. They're only going to allow you to get half of that return, and then they're only going to allow you to get 40% of that half.
That's 4%.
Right. So what's nice about that is you could carve out a portion of your assets and use that as a bond alternative to get a reasonable rate of return that's safe where you can't lose money. Right? That's creating risk diversification by using it as part of your overall assets, right? Not as the entire asset. Do not let someone put all of your money into an annuity. I've been saying it for years, and I'm telling you, it should be illegal to go anywhere. And I would love to do a town hall face-to-face with one of these guys, and I would love to watch them cower when I ask them, did you put all that person's money into an annuity? Right? When I could prove mathematically they didn't belong in it. That's the difference when you run an actual cash flow retirement plan. It'll show you, when you run the Monte Carlo, if these people need an annuity or not, or if they need more stock exposure, or if they need more bond exposure. It'll tell you mathematically what they need.
I like mathematics.
Right. I don't know. How many majors do you have? 43?
3 and a minor.
Oh, okay. Nerd.
Right.
Nah. It's super frustrating, and that's why when I get passionate, again, annuities work where they work and they don't where they don't. They're not all created equal. And again, could we use them? Yes. But they're not right for everyone. Just like having a full stock portfolio isn't right for everyone. There is an appropriate mix on an individualized basis. And if you want to find out what your individualized basis is, you need to call me at 216-800-9890 or go to trg.swpconnect.com and schedule an appointment on that page. Also, you can pick up past shows if you want to catch up on some of the things that we've talked about. So again, trg.swpconnect.com, trg.swpconnect.com, or 216-800-9890.
Our final segment is straight ahead. Stay with us as we wrap up today's show. This is The Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. Welcome back to The Retirement Guys. I'm Mark Elliot alongside Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. If you have questions or concerns, you're not really sure what you should be doing right now, should you wait until everything calms down? Probably not. Now would be a great time to take some action. The best time to plant a tree, they always say, is 20 years ago. The next best time is today. So same thing with your retirement planning. Would have been great if you had that retirement plan in place 20 years ago and you kept updating it as you went, but the next best time is right now. Most of you do not have an actual retirement plan. You have the portfolio, you have the tools in your retirement tool belt. You're not even really sure if they're the right tools for your situation. This is a chance for you to call the team, find out more, 216-800-9890. You can always go to the website, trg.swpconnect.com. There's Wealth Analyze on there, which measures how you're managing your wealth. There's also the portfolio x-ray that Doug talked about earlier. The top 10 stock holdings you have, it will kind of give you a grade on those. It will analyze those for you as well. So those are free things that you can do to find out more about your situation right there on the website, trg.swpconnect.com. So, Doug, you were saying that, everything starts with a phone call right now. But if Luke is going out to bars now, can't people come in and sit down with you guys?
I mean, you can. But not everyone's comfortable with it. I mean, especially if Luke's going to bars.
I'm doing my research.
What's that?
I'm doing my research. I'm seeing how many people are out there.
You're doing what young kids do, and you go to the bars and restaurants. I mean, look, everyone's going to be going out and doing different things in society right now, and as I'm losing my voice. But the
positive is we are seeing that common sense is just outstanding in America at this point.
Oh, yeah. Common sense, real outstanding. What was going on in Missouri pools?
The Ozarks?
Lake of the Ozarks. It was just wall to wall, shoulder to shoulder. And they had an interview with a kid, and he's like, well, yeah, I'm not going to go see my grandparents because they're older, so they're kind of at risk. So I'm just hanging out with my friends.
Well, here's the thing. When we look back in human history, right, when these bad events happen, typically humans, behave the same way. I mean, that's the thing when we talk about, are people going to save more money coming out of this because they see, hey, I might need 6 to 12 months of emergency reserves. Mm-hmm. I would hope, again, we talked about, I'd hope that they might, realize that it's good to have that emergency account. But, human history shows that might not happen. People are going to behave over time the same way as they did before. And that could be.
Yeah, by next summer, they'll forget this all happened.
Right. Exactly. I mean, yeah. So, I mean, can people come in? Sure. I mean, I have some people that are not tech savvy. And we do have a large boardroom where we can meet with folks and keep proper distance between us. I have multiple locations locally where I can meet with folks, and that's Ashland, Medina, and Cleveland. So we different places to meet. But most people, for the most part, haven't wanted to come in. They're completely comfortable with the Zoom meetings and saying, "Hey, yep, let's work together." Yep. So, like a lot of people, sometimes they want to know, what is even the process of moving on from my advisor? And believe it or not, it's opening up an account and doing a transfer form most of the time, and it goes from whatever holding bank that you're in to a new holding bank. That doesn't cost you anything to do that. Some banks are goofy and they'll charge you a $50 fee to close an account, which is stupid. But hey, at the end of the day, it's really not that complicated to make a change. You don't have to give like a Dear John letter to your advisor saying, "Hey, I'm leaving you." Nothing like that. It's
letter of resignation or whatever it is.
Yeah, you don't have to do that. If you want to move on from your advisor, move on from them.
Right.
That's it. And that's why I think some people are nervous too about making changes, because they have their money in these accounts for all these years and they're like, "Oh gosh, this seems so complicated." And it's fill out an application to open an account. And usually it's DocuSign. You just sign your name and verify some information. Your account's open. You do a transfer form, and typically within 3 to 5 days, the money will move. The money moves as is. If it's an ACAT transfer, an ACAT transfer takes the investments that you're in and moves them from one account to the next under the control of a new advisor. So again, not too complicated. We had, I think it was interesting. I had a new client bringing over money, and the advisor called them with a last-ditch effort and was saying, "Oh, these are proprietary mutual funds," as if they're the best thing since sliced bread. I mean, he obviously fails to mention that, he gets a trail commission from it. The company gets a cost share from it. Of course, they're proprietary. They get to charge you twice.
Yeah.
You know what I mean? So if it's a proprietary fund, that those things will typically liquidate, and the cash will come over. But yeah, it's definitely not complicated to make any changes.
Technology is great, right? I mean, back in history, probably was pretty difficult to transfer money and take kind of a long process. But nowadays, it's very simple and easy to do.
Right, definitely.
You have 3 minutes. 3 minutes.
Are we going to edit that out, or we're going to say you have 3 minutes? 3 minutes.
Chase will.
We should keep that in.
I think we should leave it in.
I agree.
You know what, Chase? I want people.
3 minutes.
Yeah, don't leave the 3 minutes in. Mark doesn't realize I have a stopwatch going to let me know how much time I have.
Okay.
Yeah, so everyone out there, we do record these shows. So remember, when you give us a call at 216-800-9890, it's going to take me a day to get back to you, especially if you're listening on Saturday. But leave me a voicemail. I'll give you a call on Monday to answer any questions that you do have. Some people are like, "Why don't you do it live?" The reason why I don't do it live on Saturdays because I would like to be with my family on Saturdays. I'd like to spend time with my daughter Olivia.
I could come over to your house, and
You're not coming to my house. You go to bars.
Yeah.
I don't even eat carry out.
Well, you got to have the good food. I love the food in Cleveland. It's pretty good.
Why don't you make your own food? Oh my God.
I have. I actually became a pretty good cook coming out of this. That's
Yeah.
one good positive. I stopped eating the Spam and stuff we talked about and all that stuff. I actually learned how to cook a little bit, and that was something positive that did come out of this whole situation.
I don't know, man.
My parents would be proud of me.
I bought that Traeger smoker and smoked ribs this weekend, and then last night I made smoked chicken breast.
Oh, that sounds good.
Oh my gosh, it was really, really ridiculous. Mark, I don't know if you've ever smoked different meats, but as we're wrapping up the show here, I made smoked chicken breast. It's not that complicated. You do a quick brine with salt and sugar. You pull the meat out. I did an applewood rub, and then I used a Traeger blend, which is like 3 different wood pellets. I made my own barbecue sauce, which is brown sugar, honey, ketchup, apple cider vinegar, little Frank's Red Hot,
right.
Worcestershire. I don't even know how to say Worcestershire.
Something like that.
Something like that. You let that stuff cook for about an hour. You open it up. You baste it. You let it go another 30 minutes, and man, did that stuff come out good.
Yeah. My mom was a phenomenal cook growing up, so I should have taken lessons from her and learned how to cook. So now that I'm learning how to a little bit, I'm texting her every once in a while saying, "Hey, how do you make this thing, or how do you go about it?" So I'm learning slowly but surely.
Right. Definitely. Recipes are helpful in life. I mean, if I didn't know how to read a recipe, I wouldn't know how to cook. So when we're segueing out of recipes on how to cook food, when we're talking about the recipes for your financial life, again, you've worked 20, 30, 40 years of your life. You worked hard for what you have. Don't kick that can down the road. If you would like sophisticated advice give me a call, 216-800-9890, or go to trg.swpconnect.com to schedule a meeting now. Again, don't let that set it and forget it portfolio be forgotten. Again, 216-800-9890. I love talking to you guys every week. We'll see you next week. Take care.